so now we're going to do the return outwards journal. So we have done everything that is highlighted here thus far, and we have only one. We return goods to K-Smith for $25 on January 14. We return goods. That means goods are returned out of our business, and it's going back to who we bought the goods on credit from, which was K-Smith, and K-Smith is a creditor. So we know that the return outwards journal is directly related with the purchases ledger, because that's where we bought the good first. So let's just add that now. So 2024, January 14, and the details. Who did we return the goods to? We returned goods to K-Smith, and note number, as I would have said in the previous videos, that the note number would be there because for return outwards journal, the source document is the debit note. And I'll tell you exactly why it is a debit note in just a while. And we're going to put just a number there. And the folio, where is it going? Return outwards. You can only return goods to the creditor you purchased the good from. And therefore, the folio would be PL because we already have an account for K-Smith in our PL, in our purchases ledger. And of course, what is the total? The total worth of goods we brought back was 25. So now we're going to underline, have our total line. Then we are going to double line the $25 as the total, close our books. And of course, this would be transferred in the details, transferred to the name of the account, which would be the return outwards account, capital R for consistency. And of course, this goes to the general ledger. So from journal to purchase ledger to general ledger. Now we go to the purchases ledger. And in the purchases ledger, you realize we have the accounts there already. And there's one for K-Smith. We bought goods and credit from him at January 1. Now we're returning goods. So the amount that we owe K-Smith is going to decrease by $25. So if you look at it this way, it's a creditor. And when creditors are liabilities, when liabilities decrease, what do? We debit. So we're going to debit the account for K-Smith 2024. And the date was January 14 that we returned goods. And of course, we have to put a description or the details, return outwards. And where did this information come from? This information came from the return outwards journal. So we put ROJ. All right. And then the amount of money we brought back was $25 worth of goods. Remember, I told you why is it called a debit note? Because to reduce the creditor's account, which is K-Smith in this case, we had to debit his account. And as a result, it is called the debit note. A pretty good way to remember it. So we have done this, so we can, I'm just going to embold that for now. All right. And then we go down to the general ledger. So in the general ledger, we would have had the purchases ledger. Sorry. In the general ledger, we go down, we have the sales account, the purchases account, return inwards, and now we have return outwards. And of course, return inwards and outwards are opposite. If you always debit return inwards, you know you're going to credit return outwards, but you can always use the analogy that I love to use, the accounting double entry rules. So return outwards is one of the movement of stock. So if stock is coming out of your business, inventory is coming out, and these are assets. Asset is decreasing, then you are going to credit. So return outwards at all time will be credited. Return outwards account. And we put the date, 2024. January 31, the last day of the month. And it will be the total credit returns. And where is this information coming from? The info is coming from the return outwards journal. And the total was $25. And that's it. and we are completed. And that's how we do the books of ordinal entry. So I'll attach all the links here at the end of the video so you can go. I'll post a link here and you can go through to watch the other videos on the sales journal, the purchases journal, and return inwards journal. Have a good one. Blessings.